All right, guys, I am sorry for the catastrophe. I have no idea what's going on with YouTube kicking us off the stream. I assure you, it's nothing coming from our end. It really is. It must be YouTube. Okay, because we weren't having these issues over on Twitch or DLive. Hopefully the Roku people are not losing their heads yet. Bearish divergence on the YouTube oscillator, man. Yeah, absolutely, man. Such is life. But hey, it's cool. We just shoulder on. So listen, guys, I'm not exactly sure where we cut off. So I do just want to start over with this article because this is really important analogy that I want to make. This is a really important lesson and teaching opportunity that I want to take. So I apologize if you guys got some of this and if I'm just going to have to repeat myself. We are going to go ahead. What I'm going to do after the stream is over here in about 30 minutes, I'm going to go ahead and take what we have, this will be 3 now videos that we've live streamed, and I'll stitch them all together and re-upload them so that you guys have everything that you can watch back at your convenience with no glitches. Okay. So the next story of the day is going to be here about the repo markets. Okay. So just last week, we reported on the fact we reported on a liquidity crunch in the repo markets, which required the New York Fed to step in and provide a repo liquidity program of their own. Now, since then, we've learned each morning since the liquidity scare that the Fed has made available $75 billion of repo offerings and announced September 20th, when the same day that we went short on Bitcoin, that it would be opening 3 additional 14-day operations of $30 billion each. Now, that is about $400 billion in a not since 2008 liquidity level being extended to relieve this short-term lending market that only sees about $1 trillion a day in action. That's 40% of the lending market's liquidity being provided by the Fed. And that is untenable. And we'll talk about why here in just a second. Now, the repo market is an important, but it's often overlooked underpinning of the banking system. So I want to talk about how this reality, this new reality, is making me rethink my bearish bias to the overall global economic situation. And we'll break it down like this with an analogy. Now, in day-to-day human life, often you were going to come upon situations where you were going to have the ability to get a good deal if you have liquidity now. You know, your friend might approach you and have a car, and he says, I really need cash right now. I have to pay my mortgage, or, you know, I have to pay my lawyer, and I don't have any assets. I don't have the cash. I need liquidity. I will sell you this car that is worth $15,000 for $4,000, but I need the money now. Well, that's a great deal. But most humans in first world countries live hand to mouth or paycheck to paycheck. Now, that means that you're going to need liquidity now. It could be something more benign. Like, for example, you go to the grocery store or you go to Amazon and they have a deal on diapers for your child. So you could buy an annual supply of diapers for 30% off, but you have to buy an annual supply now. Now, most individuals just do not have savings. Most individuals do not have much money to get them by from month, or to get them to more than to get them by from month to month. And most people are lucky if they're contributing money to their savings. I think this has a lot to do with humans' spending and saving patterns, but that's perhaps a topic for another time, a topic that we've covered many times on this channel. So the issue here is humans need liquidity now to take advantage of opportunities in the market, but often they do not have that liquidity themselves, meaning if they want to take advantage of such an opportunity, they're going to have to turn to a lender. So an entire market has been built around this basic human need of requiring liquidity now to make economic conditions more tenable for them or better for them. So what they'll do, so what has been built up to service this need is the loan market, credit cards, payday loans, all of these types of things. And these banks will charge you exorbitant interest rates for the right to loan you capital, to loan you liquidity that you need to capitalize on this opportunity in the market in front of you, right? Now, this is often, for most people, not an opportunity in the market like we as traders talk about an opportunity in the market. Opportunity in the market in our parlance is often going to be, you know, a screaming buy on a stock or on a cryptocurrency or on a foreign currency pair, something of that nature, or a great trade or a great trade setup that we would like to provide more capital to. That is the purpose of leverage. Now, because these banks are going to charge you exorbitant interest rates on these loans, often it negates in a wide degree the value of the deal that you are now purchasing. But The reality is that situation, that fundamental situation of needing liquidity now that you do not have access to, also happens in the banking sector, right? So banks often have, and now this is more opportunities in the marketplace, as in the parlance of what we speak of, banks will often have opportunities in front of them to capitalize on. They have an opportunity to provide a loan. They have an opportunity to buy stocks. They have an opportunity to make an investment, right? Investment banks, large banks, corporate banks, they all have these opportunities. But because of fractional reserve banking, because banks are not securing their deposits in-house, they are utilizing deposits as the basis for loans. They're utilizing deposits as the basis for investments. That means that capital, that liquidity of theirs is now tied up. Again, remember, there is a federally mandated reserve requirement for how much money banks need to keep in reserve. And I guarantee you, almost no bank keeps more money than that in reserve, because that money in reserve is just being held on deposit with the Federal Reserve Bank and earning potentially negative interest rates. So, or just barely beating inflation, or earning about 2 to 3%, depending on what the Fed is currently paying in interest rates. Now, you can make a much higher rate of return by investing in the stock market, by investing in real estate, and that's what banks are doing. They are taking deposits and they're investing. This is why bank runs are a problem. Bank runs are when individuals who have made deposits with the bank approach the bank en masse and request their deposits back. That it should not be a problem, because the bank should have all that money on paper. But because they have used that money as the basis for investments and loans, they actually don't have the liquidity to satisfy the needs of individuals who want their money back from the bank, because that's just the way it is. And thank you so much, federal or fractional reserve banking, for that. You have created all these potential crises in front of us by not allowing us to have a stable, sound source of money that is held securely in reserve as a in your savings account. Essentially, you have created this phenomenon of inflation. You have created all these issues. Now, so banks who are wanting to be active in the marketplace, again, banks are competitive. They're going to come across opportunities in the marketplace where they will need liquidity. They will need capital. So what will they do? They will approach another bank for a more attractive loan than they would from a credit card company. Banks aren't going to go to a credit card company. Credit card companies are going to go to banks for loans. So banks are going to approach other banks for loans. Now, so banks, all the banks are in this situation, because let's go back to the 2008 financial crisis. Let me talk to you guys about leverage. So we've talked about the difference between the Binance.com style of leverage or margin trading, and obviously the difference between like the BitMEX and Binance more active form of leveraging and margining your position, right? We have to understand that banks are leveraged to the hilt with their investments, with their trading activities, with their loans, i.e. a bank that has $10 billion in deposit is going to go and get $90 billion on loan and use that $10 billion as collateral so that they can leverage the punch that they pack. This is exactly what caused the 2008 financial crisis, because banks were over leveraged to the hilt. And guess what it was? Guess what the straw was that broke the camel's back? It was interbank liquidity. It was interbank liquidity, because all these banks are all leveraged to the hilt, meaning they don't actually have liquidity, a lot of liquidity to capitalize on events. So when they see an opportunity, they're just going to approach another bank, grab some money from them. That money is used as the basis of a loan. And these are often within 1 day paid back. Like, a bank, we just need $25 billion to take this trade real quick. And generally they're going to go and use that $25 billion as the basis to go get $250 billion to leverage that $25 billion up. So they're just approaching multiple banks. All these banks are loaning all of this money back and forth, right? And so they're all indebted to each other. It's all a very complex system of liquidity and loans and risk. And that's why the moment one of these banks declares bankruptcy, it makes the entire system crumble like a deck of cards, like a house of cards, because the entire system was not, remember, all the actual money is invested. The money is not vested, it's staked. It's somewhere else. It can't just be pulled. To get the actual money, stocks have to be liquidated. Positions have to be unwound. Companies have to be sold off. This is all complicated. The actual money is tied up. It's buried in the ground, right? Not buried in the ground in the way that you would bury cash in the ground. But when I say that, I mean it's put somewhere. It's busy. It's active. You can't just grab it. It's non-liquid, right? To make it liquid, you would have to sell shit. Banks would have to sell off their holdings. So they just need the cash to take advantage of these short-term opportunities. And so this entire system is all built on a deck of cards. And that's why this is let's go back to 2008 financial crisis. Lehman Brothers declared bankruptcy and said, we can't pay back our interbank loans. We can't pay the banks back that we took loans from because we're leveraged to the hilt and they're leveraged to the hilt. When they default on that loan, the next investment bank, Morgan Stanley, they go, oh man, if they don't pay us back, we can't pay back JP Morgan. And JP Morgan goes, oh wow, if Morgan Stanley doesn't pay us back, we can't pay back, Citi over here. And so what happens is the entire system falls down. Banks default en masse, and the federal government steps in with their bailout. This is what happened back in 2008. So what's happening right now is we're seeing the exact same thing happening. There was a bank that could not pay back its interbank loans. So what did it do? It approached the Federal Reserve Bank, the New York Federal Reserve Bank, which you're not supposed to do. Among banks, once you approach the Federal Reserve Bank, that means that you are basically insolvent. You can't pay back your interbank loans. And the reason why that's so taboo is because that is exactly what kicked off the 2008 financial crisis, was the morning that Lehman Brothers had to call the Fed because they couldn't pay back their loans. They need capital injection. When we understand that these investment banks are the ones that are running all of our pension funds, when they are the ones that are running all of our retirement funds, our 401ks, they have the mass of the stock market in their control with all of their investments. And they're going to go bankrupt in a split second. And the moment they do, every other bank is going to go bankrupt too. And we're going to be right back where we started in 2008. The problem in 2008 was banks were leveraged to the hilt and did not have liquidity on hand. We just kicked the can. The situation is worse than it is. The situation is worse now than it was in 2008. And we're seeing the exact same thing happening. And so make no mistake, people aren't talking about this, but the fact that the Fed has injected $400 billion in liquidity for banks to be able to pay each other back means that that's exactly where we are again. And, we've talked about this before. Here's the thing, and this has been my stance for a while. There is no big looming economic, hullabaloo to point to and say this is the reason the market will collapse, because the 2008 financial crisis was preceded and anticipated by the housing market bubble. There is no subsequent bubble right now. Stocks are not in a bubble. Commodities are not in a bubble. Housing is not in a bubble. There's no .com bubble. Bitcoin's not a bubble. There's no bubble. But it could be that this is just the lingering effects of cans being kicked 10 years down the road and investment banks not structurally changing the way that they operate, because they have not. And yet, once again, we find ourselves in this liquidity crunch. So this is actually pretty bad. This is more dire. This is more important for you watching, for your immediate future, than the price of Bitcoin. Unfortunately, that's the world we live in. This could also be why Bitcoin is likely to resolve to the downside. Again, as investment banks begin unwinding their risk on assets, the first thing to go is their Bitcoin holdings. So I want you guys to understand where we're at, why this is concerning, and why government just sucks at everything that they do, man. Government just sucks at everything that they do. It's tragic and it sucks. But just as with children, as a father, I've had to let my child suffer, and I don't mean in a bad way, but suffer, I let them learn from their mistakes. I don't fix their problems for them, right? Otherwise, I'm not teaching them. You have to incentivize children to fix their own problems, right? You have to incentivize children to learn, to strive, to grow. You have to nurture and foster that need, that desire to change what they're doing to receive a different outcome in the future. You have to teach a child that they can negotiate with the future, that they can leverage time and discipline now to receive more favorable results from the future. And if you constantly fix your child's problems and do not teach them to do for themselves, then all you're doing is creating another one of these, walking, barely talking mouth breathers that are not improving society whatsoever. You're, creating more guppies. You need to create warriors. And unfortunately, that's the exact same analogy that I'll use for describing the situation with the investment banks. The government stepped in to do what they did. The government stepped in, the federal government in 2008 stepped in and did what they did to prevent an economic calamity. But all they've done is kick the can. You have to pull the Band-Aid off, right? The only way that things will change is you have to not bail your children out when they make a mistake. You have to let them learn from their own mistakes. What makes the situation really terrible, unfortunately, is the fact that our wealth as a nation is tied up with these idiots as well. So, short the banks and long Bitcoin, ladies and gentlemen. That's all I have to say. That being said, let's head right back on over to Bitcoin, because we are making that movement down, guys. Ooh, we broke 9,000, currently trading at 89.56. Look at her go. It's like Bitcoin was watching, man. There we go, man. Broke the barrier. Lovely, lovely short position of mine. Go, baby, go. $89.30, $89.29. Let's watch the 15-minute chart. This will actually, you know what? Let's bring out the 1 second chart. A little bit of consolidation here. You can see the tilt of the market move from straight down to moving sideways, we're getting some stiff competition. People are buying right now. Those are some big buys coming in right now. Ooh, and a breakdown from that. Ooh, nice, man. 88.48, 88.32. Go, baby, go. Make daddy rich today. Oh my God, 88.15. Let's see if we get any reaction from that 8775 area, right? 8775. It's the weekly 30-period Donchian. Wow. And blew right through it. I died in bear market anyway. I'll resurrect as a zombie soon. Man. What a move. What a move. Look at that damn candle, guys. Look at that bad boy. That's a 10% down move just now. All right, so what do I want to watch for? I want to watch for... This is going to sound silly, but I got to take some profit right around here. And I think this is probably a good place. So I'm going to... Just a moment, guys. First thing I'm going to do is pull open my Discord. I had to pull back open my Discord, sorry. Come on. All right. Yeah, I'm gonna take about 30% off right here. And I'll wait for the other 20%. Just one moment, guys. All right. Let that 20% ride for a little bit. We'll see what the market looks like a little bit later tonight. All right, so let's look at where we're at, guys. Man. 87.57, man. What a day. 87.57. What a move. When you trade on the right side of the market, guys, I've said this many, many times before, right? When you trade on the right side of the market, good things happen, okay? You never know how strong or how long or how far price will go. We are currently at the weekly dynamic level of support and resistance, right? 87.75. We've pushed back beyond that a little bit. Obviously, we swept low on this candle, reached a low of $8,600 on the ByBit chart, exactly 8,600 to the dollar. Let's see if this level holds for a little bit. This is a logical area to see some consolidation, especially after a massive move like that. So listen, there's reversal trades that are on the table right now. As I said, I took a pretty good chunk of profit here on my short trade, because you have to. When you see a massive candle like that, you don't get greedy. You take good profit. That's 10% more profit than I just had a couple hours ago. So I'm gonna take that. I'm locking that in. Price continues to go down. Great. I've got more downside exposure. But you know, markets do collapse faster than they build back up. But, you know, is it possible that we drop down another $2,000 overnight? Yeah, but more likely it takes time to get there. You have bounces, you have corrections, you bounce, you move up. ByBit just pulled your short on EOS. I mean, they have auto deleveraging, so it's possible that you got ADL'd. Last week about this time, people were on altcoin season. Watch now, watching BTC bleed out. Ninja Fist TV says, just want to thank you for sharing all your wisdom, Justin. If this happened 3 months ago, I would have been long right now. So fire up that Coinbase account and get ready to buy some cheap Bitcoin today or next few days if this doesn't come back up well. Yeah. So, you know, this is a cheap range area to buy. Okay. I don't know if it's a cheap trend area to buy. That waits to be seen. And we already talked about negative trending indications previously. Now we are closing below the weekly 30. So likely to see a bounce here. I prefer to take it on the bounce and then retest breakdown. But again, there's not really a whole lot that one needs to do here except take some profit, scale some profit out on the way down, and just wait and stay short. Don't be too eager. You don't buy the first bounce. You don't buy the first bounce. Dum-dums buy the first bounce. Then they get smoked. You buy the second bounce. Go, baby, go. Show me how powerful you can be. Still dropping like, oh, whoop, whoop. Let's go, baby. Ooh, nice big buy right there. A nice big buy. $8,500 it is. $8,550. All right, so now this is what I meant. Like, so this is a better area to buy if you're trying to be a buyer. Not saying it's the right place to buy. I'm just saying you don't buy the first bounce, right? The first bounce gets smoked every time. Every channel coming up live now. Yeah, watch. Here's the thing, man. You're going to see every crypto LARPer come on live right now, and this is what they're going to say. Yeah, man, we were just sitting in the situation room, and we're totally short right now, man. You guys didn't... There's Ada for the guys in the group. Ada U19 just hit T1. We were just in the situation room, and we're totally short now. Bitch, you fucking panic sold at 8,600. Shut the fuck up, man. See, I told you, this was the better area to buy the bounce. I didn't say it was the right area, but you don't buy the first bounce. The first bounce always gets smoked. First bounce always gets smoked. Buy the second bounce. Yeah, here come those short licks. All right, look for a more sustained bounce right here. There we go. Filled that gap. Hell yeah, boy. Yeah. Yeah. Told you it was going down. That's what they're all saying now. Man, get out of here. Listen, all those guys about 2 hours ago were saying, oh man, hold on, let me show you what they're going to say. This is what they were, if they would have been live 2 hours ago, they would say this. Let's go to the ByBit chart. About 2 hours ago, they've been like, man, look right at the bottom of that triangle, man. So we're just going to buy, price is going to go up here, and then we'll sell. Filled that gap on the CME futures. Yep, there it is. Gap filled right there, buddy. Makes this a buy zone. Captain Z Attack, thanks so much, man. Please explain why futures always get filled. So gaps don't always get filled, but they just tend to on Bitcoin. Bitcoin has a really good track record of filling up gaps for whatever reason. Let's go look at XBT USD. All right, so over on BitMEX, currently trading 85.87. Let's go to our longer term chart. We talked about all these levels in the first hour, but we'll just revisit them because this is exciting. I wanted to go over to that weekly, see what kind of confluence that we had. Again, you know, the longer, the best thing that we have is the baseline on the weekly, 87.75. I mean, because really getting down below that, you're talking about 7,700. Now, I have not filled long. I took the majority profit on my short a while ago. There we go. See, what did I say about the second bounce, guys? Come on. First bounce always gets smoked. You know what I'll probably do though, because that was such a huge move down. You know, this is usually a time where I'd open up a hedge. Well, I wouldn't open up a hedge long. That's the wrong word because I'm short. But I'd open up a long on BitMEX. Yeah, I talked about that strategy. That's the volatility expander strategy. Not going to be able to do that now on the daily. We're way below the mean. So a reversion to the mean trade right now is going to have to pit us all the way back up to 94. That strategy works in a range. We've broken the range very, very concisely now. But again, same thing. A massive movement down into an area of demand. It's not a bad area to buy. It's not what I'm going to do. Not yet. I'd like to see some confirmation. But definitely taking profit, man. Definitely taking profit. Fletch says, my wife is not happy. Your wife's watching this chart like, she's like, babe, you told me that we should put all of our life savings into Bitcoin. We just mortgaged our house and bought Bitcoin. And you told me when the chart goes up, we're happy. And when the chart goes down, we're sad. And what is that? You're sleeping on the couch tonight. The gap isn't completely filled. If we go over to the daily, I mean, it depends on what do you mean by gap filled. There's no, does it have to go all the way down to the bottom, or does it need to trade into the median? Because a full gap fill would be taking price down to 85.15 on CME futures. We're on delay though. So if we go over to Stamp, and we look at the low for the day, what's the low for the day? 85.15. I fucking shit you not, dude. I shit you not. Go over to Bitstamp. What is the low of the day? 85.15 to the fucking dollar, dude. BTC futures continuous in front. What is the gap? 85.15. Look. Oh, you guys can't fucking see it. There we go. 85.15. 85.15 is the low of the gap. BTC USD stamp. What is the low of the day? 85.15. Gap boys fucking rejoice, man. Gap boys rejoice. What a fucking day, guys. What a good session, man. If you guys are in the group, make sure to move your stop loss on ADA-U19 to break even. All right, so we'll go look at the premium trading group's open trades for the day. BTC USD short since September 20th. We're 80% out of the position right now. EOS USD as well. I think it's time for us to take prop. We got the trailing stop loss. The trailing stop loss is going to hit right here. The trailing stop is going to hit at 2961, which is good. I think. Yeah, I would want to go ahead and take 30% off as well on that. Yeah, so we'll take off another 30% on EOS. Keep that trailing stop loss at 36 cents. That trailing stop loss from the low is going to be right here at around 2955. Okay, oh, that's another reason. Somebody, you must be in the group. They said, or maybe they're not. EOS USD kicked your trade out. Maybe if you had your trailing stop loss set wrong. Andrew, thanks so much for the sub on YouTube, my friend. This microphone's like in my way. Okay, the other trades that we had open too were ADA-U19. Took ADA short as well. Ooh, nice. Jesus Christ. Hit T1. Probably already hit the stop loss on that, actually. Let me pull open my BitMEX. Mm-hmm. Snapback. Yeah, right at entry right now, so that's a close trade. All right, and then the other, we also shorted ETH Bitcoin on BitMEX as well, BTC. Let's go and see here. I'm going to set a trailing stop loss, I believe. Let's see if we've reached the qualifications. Okay, so entered last night, and ATR was 77624. Yeah, here's the 2x ATR level. So closing below that, then we'd want to set a trailing stop loss of about 0013 or 0014. Excuse me, 0014 would be our trailing stop loss value on ETH-U19. So I'm actually going to hold ETH-U19 open. Make sure we already hit T1 on that. So just make sure you guys move your stop loss to break even. And we'll probably be setting trailing stops for the Bitcoin pairs. There's no reason to close the Bitcoin pairs out, because not only are the Bitcoin pairs going to dump with Bitcoin, but if Bitcoin does put in some good recovery here, which, what the heck? Why did it open up my strategy tester? Oh, which with Bitcoin being at 86.19 already having recovered $100, they'll just dump more. They'll just dump more. All right, let's go look at how that bounce trade is working out. Yeah, not bad. Got the first bounce, higher low, equal low, current resistance at 8,700. Current resistance at 8,700, current low at 8,515. Range trading. If you're price action trading this, you're looking for higher lows and you're looking for that 8,700 resistance to get bought. But right, this is the exact area where you throw up the volatility expander and you would just do this. You would just trade this. This is probably going to work better on the 15 minute, maybe not the 1 second. No, not the 15 minute. Probably the one, maybe the 30-second chart. Yeah, 30-second chart's probably better. Yeah, volatility expander on a 30-second chart. This is where you want to live if you're day trading this, which kind of seems silly. If you're like jumping in to day trade this and you don't have a robot to do that for you, I would say that you need to learn how to manually trade. Because manual traders caught all this. And we're like, yep, we're done. We're good. Time to go smoke a goddamn cigar outside. And you got bots and algos that are coming in now. Take profit, chill out, step on the sidelines, wait for a movement. Now, listen, guys. Don't get freaking greedy here, all right? I know you look at these chart, and I've already seen the comments in here. People are coming in, they're like, Bitcoin to 3,000, Bitcoin to 1,000. Just chill out, man. Most likely the movement's done. Most likely the movement's done. Price going to move sideways, probably put in a recovery pump, take profit on your short trade. Look for a clear objective signal to get long if you want to go long. KL Malcolm, thanks so much for the sub on YouTube. And just chill out. Jurgen Ernst says, I'm going to enjoy 420 today. Tolbarus, it's amazing how the price was steady for months and now all of this negative action. Why? Just because of backed? Am I missing something? No, it's just, you know, Bitcoin is an extremely volatile asset and we were seeing volatility get contracted. You know, if you go back actually to the first hour, so I've been live for 2 hours and 16 minutes. So I've caught the entire breadth of this. So at the very beginning of the video, I was talking about how I was short and I explained why I was short. And then that all led up through and we just witnessed this dump live. So I think this is going to be one of the best videos. And you know, what's so funny is that this is the day. We never have technical glitches when we do our streams. But today, on a big day that would be so educational. Now, it's all there live. But what I am going to do is I'm going to compile, because we had YouTube kick us off twice. So we had to restart the stream twice. But those streams are up. But what we are going to do is I'm going to stitch together all the footage from today's stream. And I'm not going to make any edits. I'm just going to take the 3 videos, download them, and put them all together in one. I'll cut out the be right back scene. And that way you guys can see the anatomy of a breakdown. And in my opinion, probably the best way to do that. Thank you so much. Sorry, Store, for the sub on YouTube, my good friend. All right, it's negative 10%, not doomsday, man. Mr. Ether just got 110% in EOS. Woohoo. Awesome, man. Good to see, man. Yeah, I mean, without leverage, I'm probably up there with you in the triple digits on P&L, but just percentage-wise, EOS moved. EOS is a 50% trade for us. 48.24% spot, right? So that means price moved 48.24% spot. So yeah, I think, and we already just took 30% off of that position just now, my brother. So I'm going to let that other 20% ride on my EOS short. I'm 80% out now on my Bitcoin short. I'm going to let that 20% ride. ADA U19 hit take profit 1 for me, came back to entry. FU19 hit take profit 1 for me. I'm short on all those. I have no long exposure right now. Except for now, listen, I say that, but you guys have to understand. People watch, and I know some of you are new. Like I have Bitcoin that I just hold. I've always dollar cost average into Bitcoin and stocks and precious metal. Getting long means buying now and holding until an uptick, right? Well, it means buying. Yeah, going long. So you know, I mostly trade Bitcoin futures. So that means long is buying and selling short means I profit when price goes down. So I'm short. That means I've just covered my short. I've removed myself. I'm still hedged, right? That's what I had to do over there. I had to remove from my short position and add to my short, and add the profit to my short hedge. But B-Flow says, I was leveraged to the gills with EOS. They closed my position for me. I just bought. When should I sell? I mean, you're asking a question. I mean, listen, if you're buying right now at a higher price would be a good place to sell. Now, I'm saying that very flippantly, but you have to understand that I do not trade reversals. So this is not an area where I'm going to be buying. This is an area where I'm covering my short. And when I see price put in signs that it will trend to the upside, then I'll be a buyer. Can I explain how to set a trailing stop loss? Yeah, sure, man. So in ByBit, let's go to ByBit. I think we can get into the terminal. Yeah, here we go. So on ByBit, you will have your open position right here, down here at the bottom. And right here where it says TPSL trailing stop, you just hit the little, it looks like a pencil or a pen, and that'll bring up your edit order window. And you will just click trailing stop or TSL. There's three options. There's take profit, stop loss, and trailing stop loss. So you'll click the check mark next to trailing stop, and you will put in the distance that you want your trailing stop loss to be set at. So EOS USD is a good example. So let's go back over to the EOS USD chart. So I entered EOS USD up here, and this purple line is where if we close below, I would set a trailing stop loss. Now, obviously, EOS has moved down 50% for us, so of course I'm taking advantage of that and has a trailing stop and already set a trailing stop loss actually before this huge movement to the downside. So that trailing stop loss was at 36 cents. So let's see. So price would have to come back up here to hit my TSL right about here, about 2955, I believe it was 2.959 now. But meaning whatever low price goes to, your trailing stop loss moves down with price. So as price moves, so this is price, and this is your trailing stop loss. As price moves down, your trailing stop loss follows it. But then if price comes back up, your trailing stop loss does not move. And if price comes up and hits your trailing stop loss, you're out of the trade. So you don't put in the number or the limit price that you want to sell at. You put in the distance. So for me, I use ATR, an ATR percentage to determine what my trailing stop loss value is. Okay, hold on. Let's see here. So am I hedging with a long position or another short? Well, of course I'm hedging with a short. You can't hedge with a long because when you have Bitcoin, you are long. You have long exposure to Bitcoin. Long exposure means if price goes down, you lose money. Okay, so just by buying and holding Bitcoin, if Bitcoin's price goes down, you lose dollars, right? The amount of Bitcoin you have remains the same unless you buy or sell, but the dollar value of that Bitcoin will go down if price goes down and go up if price goes up. That is the definition of long exposure, okay? The only way to hedge when trading Bitcoin is to open up a short. You have to know how to short sell if you're going to trade Bitcoin. You have to. And go watch my Trading Crypto 101 video. There's a playlist on this channel, Trading Crypto 101, margin selling explained by a professional trader, where I explain how to hedge, how short selling works, how leverage works. You have to know how to short sell if you care about how much dollars you have, as opposed to just how much Bitcoin you have. Thomas, thanks for the sub, man. Welcome to the community. If you care about how many dollars you have to know how to short sell. You can't just trade Bitcoin long. You can't, because you cannot hedge against your dollar value. You have to open up a short to hedge your dollar value. You have to, because just owning Bitcoin means you're long. You have long exposure. The only way to mitigate long exposure is to not hold Bitcoin, i.e. cash. So sell your Bitcoin into cash, or to open up a short. And I much prefer opening up a short, because that way I can hold my Bitcoin and I can profit on the way down. So, okay, so just, and B-flow. So for any of the guys watching, let me explain this. You now have more dollars, right, than you had before by closing out your short. So whatever so remember, when we open up a short, you have to take how much Bitcoin you have and short, or the dollar value of all the Bitcoin that you have, and you have to short that number of contracts. So if you have $5,000 in Bitcoin, you have to short 5,000 contracts. Now you're hedged. Now, if you want to take a short on top of that, you have to add that to that number of contracts. So if you have $5,000 worth of Bitcoin, you have to have a $5,000 short position. And then if you want to take a $10,000 trade, you need to have in total 15,000 contracts open to the short side. Okay. You will only lose dollars on the $10,000 position. This sounds crazy, but it's true. If you have $5,000 in Bitcoin and you have a $5,000 short, if price goes up, you will not lose dollars. I know that on ByBit, because it shows the USD value of the BTC that you're losing, you'll think that you're losing money, but you go over to your assets tab and you'll be like, oh, fuck, I still have $5,000, even though on your trades tab, it'll say you're down $300. You have not lost $300. If you have $5,000 of the Bitcoin and you short 5,000 contracts and price pumps up 20%, you haven't lost a fucking dollar. Go to your assets tab, you'll see you still have $5,000. You've lost Bitcoin, not dollars. Bitcoin, not dollars. You have less Bitcoin, but that Bitcoin per unit is more valuable. You have the same amount of dollars, minus the fee to open up the trade and market fees, right? But so anyways, you want to make sure that your hedge position is equal to your actual equity, right? Now remember, on ByBit, there's equity and balance, right? The value that you want is going to be equity, okay? You want to add your profit, how much dollars you made, and your trading journal will tell you that. The trading journal we give you guys in the group. Your trading journal will tell you how much you profited off this trade. You need to add that to your hedge, or the better way to do this is close your position out for less that. So whatever risk on position that you had, or whatever portion of that you're taking, subtract the portion that needs to stay in your hedge when you close out your position. Jonathan's like, I don't know how to short sell. I got a video on that, man. Check it out, brother. Should I buy Ethereum now? You know, here's the thing, man. You know, we talked about this before. I don't trade reversals. Now, this is a very attractive area where Bitcoin's price is. I do think it's likely that we do get a bit of a bounce here. I'm not sure how strongly trending that will be. I don't know if it's going to be a correction and then a continuation of the short trade. So again, as a trend trader, this is where you take profit. Take profit and go smoke a cigarette. You know what I'm saying? You had a great day. And that's what I'm about to go do. I don't smoke cigarettes, but all right, guys, listen. I absolutely love you guys. It's 2:30. I've already been on a half hour longer than I usually am. I do have other things that I need to do. This is the time of day when I go work with my developers on our algo strategies. I also have I have a mentoring session at 4 o'clock that I have to get ready for with one of the students. So you guys are absolutely fantastic. Thank you so much for joining me. We're going to slide over here. And for those of you guys who are new, we'll tell you guys a little bit of information about who we are and what we do. Hey guys, what's going on? Good to see you over there. Were you hiding over there the entire time? Yes, I do enjoy the cross-legged on my office chair type thing, guys. Thank you guys so much for joining me for another exciting episode of Breaking Bitcoin. I've been your host, Justin Wise. I am the lead analyst and senior mentor at KrakenCryptocurrency.com. If you guys are a new trader, an experienced trader who is looking to sharpen their skills, or just somebody who wants to work with a team of experts who have a proven track record of statistical profitability and edge in the marketplace, you can check out all the links in the description down below, or go to premium.crackingcryptocurrency.com to learn all that the trading group can offer for you. We provide exclusive signals and setups to traders that are just getting off their feet, but the bulk of what we do is educating new traders in profitability. We teach how to backtest, how to create your own technical strategy from the ground up. We teach you the rules, and we give you the tools to profit and success, and to have profit and success, guys. And we're here every day from noon to 2, breaking down the markets and talking about our edge in the market, which again is objective data and statistical edge. Hopefully you guys go on to have an absolutely fantastic day. Massive, massive move in the market, guys. Extremely exciting. Above all, as I always say, trade safely. You guys know I don't trade reversals. I think this is a great place to take profit on your short. If you are a little bit more risky, yes, this might be an attractive area to pick up a long, but be very careful with that. We are trending to the downside, and you want to be careful about taking counter trend trades. Often in a trend, the move you want to do is not take the counter trend trade, wait for price to retrace, and then re-short it, because that is currently the dominant position. We'll see. Bitcoin has a great capacity to pump up, but remember this: markets crumble faster than they build themselves up. So market takes a long time to build up, only takes a few weeks to knock back down, right? Very similar to a children's house of blocks, okay? If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, please leave them in the comment section down below, but make sure to leave a thumbs up on your way out if you are watching us on YouTube. If you want to support the show, make sure to subscribe, follow, and share this video around to your friends, your family, hell, even people you don't like. It don't matter. We're all green on the inside. Well, at least my kind is. You guys are, what are you guys, red on the inside? Pink? Something like that. Now, if you guys want to see all the show notes for our videos every day, breakingbitcoin.money, all the links to guide you are down below. And make sure, if you don't do anything else, to join the Discord at discord.crackingcryptocurrency.com after hitting the thumbs up button. And we will catch you there. If you guys want to stay plugged into the market all day long, join us in the live video, or join us in the live voice chat, or just give us your thoughts on the market and see our analysis and signals, guys. All right, that's it for me, guys. Until tomorrow, I'll see you guys at noon. Make sure to trade safely, and we'll see you here tomorrow at noon to crack some more cryptocurrency, guys. I'll see you then.